We're back at Quarry Garage where I'm about to meet Rob and we're going to talk about used car finance. I'm here today back with Rob at the Quarry Garage. Nice to see you, Rob. Hi.
Morning.
Morning. And today we are doing a very informative film on is car finance right for me?
Yeah, it's just basically, I suppose, trying to break down the barriers of car finance. It can sound very complicated, very overwhelming, very expensive. And it's just a matter of explaining it in the right way, telling people in black and white exactly how car finance works for used cars and whether it suits their circumstances.
How does used car finance work?
Well, basically car finance, specifically for used cars, should be a very simple process. It can get overcomplicated if it's explained in the wrong way, but as a basic rule, a customer who's wanting to finance a used car, basically we have to put an application down to the finance company. We'll need 3 to 4 years of checkable work history, where they've lived for 3 or 4 years. We'll need to know how much they earn, because since the credit crunch, a lot more emphasis has been put on actual affordability as well as credit worthiness from the individual that's applying for the finance. We then send that to the finance company electronically, and they will get back to us with an answer whether you've accepted or whether you've been declined. It's about protection, it's the security. Clearly you're handing over some quite sensitive data, you're handing over your bank details because you will ultimately be setting up a direct debit. So the finance company need to know that you are who you actually say you are. They will ask for proof of identification by way of your driving licence. They may ask for further proof of identification by way of utility bills and bank statements. All of this information is extremely sensitive. So any customer who's coming in to potentially apply for finance can be safe and have peace of mind that all their information is going to be dealt with correctly, accurately and moreover securely. The other thing that I'd like to get across to our customers is that you ultimately are in control of the finance process. It's your money, you know how much you can afford. What we will do is we will put a quote on the screen for you. It's only when you are 100% perfectly happy with that quote, i.e. the monthly payment, any deposit that you put in, if any at all, only then will we propose it to the finance company. Before we do that, we will explain the ins and outs. There may be administration fees that every finance company will charge, and let's make no bones about it, as a business we make money from providing finance to you. We earn commission, and we are more than happy to be transparent and open and tell you how much we're earning. We're trying to knock down all these walls and barriers that dealers tend to put up in front of a customer to keep the information secret, but it's that customer that's spending the money.
So, Rob, do you have to put a cash deposit down on used car finance?
Not necessarily. You can, you can't. Again, it's down to your own personal circumstances. Obviously, if you put a cash deposit in, then your monthly payment's going to be low because you're not financing as much. That has benefits in itself, that over the term of the agreement, which can be a maximum of 60 months and a minimum of 24 months, if you want to settle that finance at any time, you're not settling as much. Alternatively, if you don't want to put a cash deposit in but you've got a part exchange, then we can value your part exchange and take that as the deposit. Alternatively again, you don't have to put any deposit in whatsoever. It just boils down to certain different factors of your credit worthiness. So it's very flexible. Even though it's between 24 and 60 months, you can do it at any term between those two numbers. You could have it at 42 months, you could have it at 54 months, you could even have it at something bizarre like 33 months. It all boils down to that monthly payment, and that will, make no mistake, be coming out of your bank account every month for the entire length of that agreement. So from day one where we set the finance agreement up on your behalf, that monthly payment will not change. It's a fixed rate of interest. A lot of dealers do like to take a deposit. They don't have to. But then you've got to bear in mind, again, in the act of Quarry Garage being transparent in everything that we do, that's putting money back into a dealer's bank quicker than it normally would. Anybody can be baffled with numbers. And it's just a matter of saying, right, that's how much that you're potentially wanting to borrow. That's how much deposit you want to put in, if any. And that's going to be your monthly payment every month for the number of months that you've decided not us, that you want to take the finance over.
The next question moving on is, how relevant is the APR in used car finance?
APR, or annual percentage rate, is probably the most commonly asked question that we get from customers on a daily basis. APR is both relevant from the point that it's a regulatory requirement under the Consumer Credit Act of 1974 that you've got to quote a finance deal with an APR, or an annual percentage rate. Your monthly payment isn't actually calculated on an APR, it's calculated on a flat rate of interest. So if I'm quoting you 14% APR, just to pick a figure out of thin air, the actual rate of interest that you're paying on that is probably nearer to 7 or 8%. And we can show you a very, very simple, quick calculation if you sat in front of us, just to prove that it's very, very simple. It takes about 2 minutes to explain it to you, and it just all becomes clear. However, the big problem is that I can't quote you an accurate APR, because an APR is determined on many, many variables with the finance company, again, like we've already spoken about. Your credit history, if you've got CCJs, all sorts of things that may appear on your credit report that aren't necessarily positive, they're going to affect the APR that the finance company offers you. So, how much you're borrowing depends on the APR. And what you'll find is that a lot of customers, well, I can get 4.9% APR with my bank. That's great, you can do. However, what you can't see in the tiny little small print at the bottom of that advert is that that's only if you're borrowing between £7,500 and £15,000 over a predetermined number of months, and that you've got fantastically good clean credit.
Let me give you a scenario, Rob, which is, I am coming to see you, and I have a car, and I would like to part exchange my car for another car. And I've got outstanding finance on the car that I want to part exchange. Can I do that?
Absolutely. Very, very simple process. It happens on a daily basis, and we actually take care of everything. So all that would happen is, while you were here, we'd get you to ring the finance company. We'd get them to give you an accurate settlement figure down to the exact pence of how much you owe at 12:30 today, as we're sat in our office talking about this scenario. So we've got an outstanding amount to settle, and then we need to put a value on your car. What we're hoping, and what you're hoping as a customer, is that the value of your car is at least the amount of the outstanding finance. In that scenario, we take your car in part exchange, and we as a business settle your finance off on your part exchange. You then start a brand new finance agreement on the new car that you're purchasing from us. A lot of people think that I've got outstanding finance on my car for 60 months, I'm only 30 months into that 60-month agreement, and I've got to keep it for another 30 months. That's not the case. So there's no time limit as to when you can do that. You can do that literally a day after you've taken a car on finance. You could do it 4 years, 364 days into a 5-year agreement. That settlement figure will just change literally on a monthly basis as and when one of your finance payments come out. The settlement will be a bit.
I remember the days, Rob, when I owed a certain amount on my car and wanted to pay it off, and I couldn't do it. Is that the same?
No, it's not the same. The law's changed. You can do it one of 2 ways, or 3 ways really. You can take your finance agreement out over however many months you decide to take it out over, and just pay your monthly payments. And on hire purchase finance, you just pay your last monthly payment. There may be a little administration fee for all the ownership change from the finance company to you, but then you own the car. You can either ring up at any point during your finance agreement to the finance company, ask them for a settlement figure, and pay it off. They can't stop you doing that. The difference now is that you wouldn't be charged for the rest of the interest either. That will be rebated off the total amount payable. So it's in the customer's interest to pay it off earlier because they're not paying as much interest. When you're actually looking at a deal and you're looking at the total amount repayable, which includes all your monthly payments, your deposit, your part exchange value, all the interest, then you might look at a 60-month finance agreement, which is the most popular length of agreement, and think, well, I'm paying £6,000 for that car, and I'm paying £8,000 back. But if you actually settle that car after 3 years into a 5-year agreement, you're not paying 2 years worth of interest. If you've got a pocket full of money, basically, you can ring the finance company as many times as you want during that finance agreement, and you can pay more than your actual scheduled monthly payment. And you can do that as many times as you want throughout that agreement. So again, the benefits of that are that you're not paying as much interest, and you actually own the car quicker. There still seems to be a bit of a stigma attached for somebody sitting here and openly telling us that they've got bad credit. Even if you've got bad credit, that doesn't mean that you can't get car finance. And it's literally down to the fact that we use a certain finance brokerage who've got access to a panel of in excess of 40 lending finance companies. Quite a high percentage of those deal with people, as the industry calls it, prime credit, which is good credit, and subprime credit, which is poor credit. Poor credit can come in any number of forms. Poor credit could be for somebody who is 18 years old who's got no credit, and no credit can almost be as bad as poor credit. There's no credit history there, so they can't see whether they've had a credit card for 10 years and they've paid the payments on time. They can't see they've had a loan, and they might see they've got a mobile phone contract, but the mobile phone contract is the weaker end of the proof of that customer's credit profile and payment history. So if you've got a mortgage for £1,000 a month and you're paying it on the dot every month, how it will appear on your credit report, which you can quite easily get from Experian, free of charge, and it will show as a green tick or a green box for every monthly payment that you make. And that's what the finance company, and every finance company in the land, will look at, and they want proof. And it's basically, in simplest terms, a risk assessment. So somebody with fantastic credit, whose page on Experian is all green, are less of a risk to lend them money to, because there's a payment history there. It's almost difficult these days to keep a completely clean credit report. If you're a day late on a credit card payment, that will affect your credit report and your credit worthiness. Don't get hung up if you've got bad credit. Basically, there's every chance that we'll be able to help you. Even if you've been bankrupt, if you're in an IVA, if you've got CCJs, just come and have a chat with us, have a brew, and nobody's going to judge these customers, because for whatever circumstance, whatever reasons, these people need a car to get to work and back, kids to school and back, things like that. And the other thing to bear in mind is that it's that risk and reward. So the worse somebody's credit, the more risk for the finance company to lend you money, the more reward they want back if they do lend you the money. Anybody can apply for finance, and the finance company can just ultimately say one of two things, either yes or no. But what we'll try and do before that point is establish whether it's going to be a yes or no, and is there anything we can do to try and sway it so that it's a yes.
Brilliant, Solomon. Thank you, Rob, because I've enjoyed it thoroughly.
Thank you very much, Toby.
And we're doing another one next month.
Absolutely.
We don't know what it is yet, but
Title yet to be decided.
Yet to be decided. Absolutely.